Great, thank you very much. Glad to be here again with all of you. Thanks for joining us today. Got a brief slide presentation for you. I've only got a handful of slides, and then we'll move on to our live charting platform and walk you through our strategy, our winning momentum strategy, that is, step by step. So a bit about us here at Trading Wins before I get into the presentation. We are a group of pro traders with well over 30 years of experience. We are real traders and real teachers, and we've been developing our own strategies and trading systems and teaching people around the globe from complete beginners to experts. Now in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here at Trading Wins use on a daily basis. I'll tell you exactly what you're going to need to apply this system, and then show you on my live charts step by step the winning momentum strategy. When we get to this point in the presentation, I'll ask you to throw out a symbol or two. Could be something you're trading right now or something you like to trade on a regular basis. I'll bring up a chart, we'll analyze it together, and I'll show you exactly how this system would have performed on that chart. And time permitting, we'll answer as many of your questions as possible. Now, a few poll questions for you, just so I know who's on with us today. Can you please take a moment and tell me, how many of you have seen me present at an event or a webinar before? Please type in a Y or N for no. Please let me know. Thank you. I'm just going to grab a sip of my water and we will continue. Thank you, everyone, for responding. Excellent. Okay, just a couple more brief questions. Which market do you trade most? Is it stocks, options, futures, or Forex? Can you please take a moment and type that in? Really appreciate it. Hey, no, good mix of, looks like Forex, futures, and options as well. Excellent. Stocks, thank you so much. One last question, then we will get right into this. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active, 51 to 100, or 100 plus? Thank you, Lee, John, Shannon, James. Well, excellent. Well, we got some good mix, but a lot of very active traders. Excellent. I think you're going to like what you see today. Now, please remember, trading can be extremely risky when you don't know what you're doing. So please educate yourself and don't trade with real money until you are completely comfortable with the system that you're trading with, okay? On that note, let me share with you our money management rules and how we try to limit our risk or exposure in the markets on a daily basis. First rule you've heard a million times, I'm sure: do not trade with money you can't afford to lose, but it is worth repeating. And more importantly, this is really all about trading with an amount that is small enough that it feels completely insignificant to you. Trading is so much more important how you manage a trade once you're in it than it is about selecting the entry. And if you're worried about the amount of money you have in a trade, you won't be able to remain calm and you won't be able to manage that trade the way you should. So always remember to trade with an amount that feels completely insignificant to you. Also, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. That'll still allow you to have a sizable trade on, but will reduce your risk considerably. Also, you should never have more than 50% of your account balance active at any one time in the markets. Reason being, there's so many factors when it comes to the markets that are completely out of our control. You know, any news, major news event or a catastrophic event, God forbid, like 9/11, can really drive the markets against you. So number one, this rule is there to help reduce the amount of loss you take during such a situation. And should it happen, you then have money remaining in your account that you can put back into the markets and recover those losses. And with what I show you today, I'm going to show you today, you'll see that it really wouldn't take you very long. Now, lastly, you should spread your trades out, okay? Be very selective, pick the 1 or 2 best trades per time frame and spread your trades out. We've seen many days recently where the Dow, the S&P was up very strong one day. If you jump in there with several trades and the very next day it pulls back like we've seen, you're going to end up in a big hole right off the bat. And that's exactly what you want to avoid. You want to spread your trades out and only trade the highest probability setups. And I'll explain how to select those in a moment. A couple of other sayings that we live by here, and especially if you're just starting out, I want you to write these down and walk away with them. They're extremely important. Number one, you will never go broke taking profits. Okay? As you gain experience in the markets, you will learn how to remain in a trade a little longer each time and squeeze out every bit of profit. But until then, please get used to banking those profits when you have them. Also, remember to check your ego at the door when you sit down to trade. It's never, ever about whether you're right or wrong that's important, but it's all about how much money you make when you're right versus how much money you lose when you're wrong, okay? So let's talk a bit about the system and what you're going to need to trade this. First of all, this strategy can be used with just about any charting platform, okay? There are 3 indicators we're going to be plotting on our charts. One is a 20-period simple moving average. Second is the Ichimoku Kinkin-Hoi indicator, but it is a very stripped down version of it. We do not use the full indicator. This is an indicator that has been very, very popular over in Asia for many years and has been getting more and more popular in North America over the last few years, and actually can be used as a strategy in itself. But we use a very stripped down version of it. I'll explain in detail in a little while. And of course, we have the relative strength index, or the RSI indicator, that we'll also be putting on our chart. So, you know, these are very widely available on most charting platforms these days, so there's no need to run out and purchase complicated charting software or any new hardware. If you're watching this webinar, you already have everything you need. A few benefits of this system. Number one, it will work on any market: stock, options, futures, Forex, globally, any time frame, any price level. I will show you as many examples as I have time for today. Again, we've traded this with $2 and $3 stocks. We've traded it with the Pricelines, Amazons of the world. It works very well. Any trader or investor, regardless of level of experience, can use this. I'm going to show you just how quickly you can pick this up and spot these setups on the chart. It has very clear entry and exit points. It has very low risk, and more importantly, it has been consistently profitable for us. We have been trading this for almost a decade now, and through all types of markets, recessions, strong up markets, sideways markets, you name it, all sorts of events. It has been consistent throughout. So the strategy, again, there are 3 components to this. One is the 20-period simple moving average. We have actually tested this with exponential, with weighted moving averages, different time periods. In the end, we come back to the 20 SMA only because it is the most reliable we have found. Also, the Ichimoku Kinkin-Hoi, we only use the cloud portion for trend, which I will show you exactly how to set that up in a moment. And then the relative strength index. And we do not use the default setting here, but let me explain exactly what we do. So I'm going to move to my live charts here. We're going to spend the rest of the presentation on my live charting platform and go over a few things here. So let me switch to daily here and explain something. On this chart of SWKS, what you are seeing here, this blue line, this is the 20-period simple moving average. These shaded areas in the yellow and red here, this is the Ichimoku Kinkin-Hoi indicator. This is the cloud portion, and that's all we're going to be using for trend. I'll explain how we read the trend in a moment, but before I do that, let me go into the settings and bring up the Ichimoku Kinkin-Hoi indicator and show you how we set this up. Now, you'll notice here that the default settings of 9 and 26 remain. We do not change those, okay? We do use the default settings. What we do is we uncheck the Tenkin line, the Kijun line. If we were to put these on our charts, this is what it would look like. Let me show you quickly what this will look like. Okay, so this is what it would look like with the full indicator on. Now, there is definitely a method to this madness. This will help you pinpoint entries. It'll show you support resistance areas. There's a number of things you can do with this indicator. But again, we prefer to keep our chart nice and clean and take our entries off the RSI. So we're strictly going to use the cloud portion. Okay, let me remove this and go back and show you now the RSI down here in red. Now the RSI is typically used to identify overbought and oversold conditions. So what you will see normally are lines drawn at either the 70 or the 80 level and then the 20 or 30 level. We use it slightly differently. First of all, the default setting for the RSI on most charting platforms is 14. We use a period of 7. We reduce that in half. We want a much more responsive RSI, so we cut that measure in half to 7. And then what we do is we remove the lines at 80 and 20, and we simply draw one in at the 50 level, right down the middle there, okay? So it's an RSI of 7 with a line drawn right down the middle at the 50 level, okay? So that is all we're going to have on our chart, and this is how we're going to read this, all right? There are two things you want to see when you bring up a chart. You want to be able to quickly tell if you have trend in your favor or what the trend is. And a very quick and easy way to spot that is to look at the bars or the candles as well as the moving average. If both of those are clearly above the cloud, then you have an uptrend. If they are below the cloud, you have a downtrend. And if they are overlapping the cloud, one or both, that means you're in a sideways consolidating market, which you do not want to trade in with this system, okay? So in 2 seconds, as soon as you bring up a chart, you're going to be able to tell whether you're in an uptrend, a downtrend, or a consolidating market. The second thing you're going to be looking for, if you do have trend, if you can spot trend, is momentum. How do we read momentum? We read momentum based on the slope of the candles, and this is where the 20-period moving average comes in. It is a handy tool that pretty much draws that slope in for you. Okay, so looking at the moving average, you can quickly and easily tell whether you have momentum in accordance with the trend, okay, or not. And you'll see that most recently here, it is not. It's actually leaning lower here. Okay, so you no longer have momentum here. Now, the reason why we use the 20-period moving average also is because during times of pullbacks or consolidation such as this, it would be easy to mistake that slope for downward momentum, okay? But if you look at the 20-period moving average throughout that slope, it really doesn't change, okay? It maintains that slope, and that's the key there. That helps you understand that this is nothing more than a retracement before a continuation of the trend, okay? So let's put this all together and show you how we find entries. So for a long trade, what you're going to be looking for is trend and momentum in your favor. Again, when you have the candles and the moving average above the cloud, you have an uptrend. When you have a proper slope in that moving average or in the candles, you have momentum on your side. Once you have those two things in line, then all you do is you focus your attention on the RSI, and for a long trade, you're waiting for the RSI to dip back to the 50 or just below it, and then turn back above. And when it turns back above, that is your setup to the long side. Okay? Now there's a difference between the setup and the trigger to get in, but for the setup purposes, you're looking for that bar where the RSI goes back above. But the key here, the real key, when you identify that bar, is to confirm that that momentum is still intact. In other words, that the 20-period moving average still has a proper slope. You'll notice here it had started to flatten out a little, but you still had upward momentum, and that's the key here. Now, when you do get that setup bar, what you're looking for a long trade, for an entry, is a trade just above the high of that bar, the absolute high of that bar. Okay? Once you, even one tick is fine. Once you get a trade above the high of that bar, you take a long position, and your stop will go just below the most recent low. Okay? So you're giving yourselves a bit of a buffer there, and I'll tell you why. Many times, what you're going to see is what we call a double dip in the RSI. In other words, it'll move below and back above the 50, and then once you're triggered in, it'll again dip below and back above the 50, giving you what looks like the letter W, okay? Some kind of W pattern here for a long trade. Now, you want to see this. Reason being is typically when you get a double dip on the RSI, it typically leads to a much greater move to the upside or in your favor, okay? Which is huge. So, again, you're looking for trend and momentum. Trend we read by having the candles and the moving average above the cloud. Momentum we judge by the slope in the 20. If we have those two things, we focus our attention on the RSI, and once we get a dip below and back above, okay, and even better if we get a double dip such as this, that's our entry, and off we go, okay? Let me show you an example to the downside for a short trade. Same rules, just in reverse. In other words, when the candles and the moving average are below the cloud, we have a downtrend, right? If we have a proper slope in the moving average, that means we have momentum in our favor. Once we have trend and momentum in our favor, we focus our attention on the RSI, and whenever we get a dip above and back below, all right, and it really doesn't matter how far this moves above the 50 or whether it just comes back and what we call kissing the 50 line here, okay? It just comes back, touches the line, and retraces. That's fine as well. What matters when we get this pullback, okay, because this here is the setup bar right in here, what matters is that the slope on the 20 has been maintained. That tells you that this retracement was temporary and that this move is going to continue, okay, like it did right here, okay? What this is doing is helping you identify the easy trades during a sustained trend, and typically when you have a sustained trend, you're going to get more than one entry, okay? You're going to get multiple setups here. So there's a couple things that you may want to take note of. Number one is when you do get multiple setups along the way, there's another one in here, there was one right in here, happened on this gap. Now there's a couple of things I want to bring to your attention here. Number one, if you get an entry or a setup off a gap, you want to reevaluate your risk, because your stop would go just above the most recent high in this case, and if that's too far away for you, there's too much risk, then just skip the trade and move on, because typically there's going to be another setup along the way like there was in here, okay? The other thing is, if you're more of an aggressive trader, when you see multiple setups along the same way, okay, or other setups after you're already in a trade, you can add to your position with every new setup, okay? But if you're more conservative like I am, you could strictly hold on to this position and take these new setups as further confirmation that you're in the right trade and you should remain there for a little while, okay? The other thing to note is that, and this is important, when you move from one side of the cloud to the other with momentum, okay, in other words, with a slope, if that moving average moves from one side to the other with a significant slope, that typically is the starting point of that new trend, and it typically leads to a sustained move, so a much greater move than would otherwise happen if it sort of took its time to move through that cloud, okay? So that's very important. Let's go through a few more examples here. So here's an ETF, the TLT, the 20-year Treasury ETF. Again, what are we looking for? We're looking for trend, quickly spotting trend. If we look at this today, it's overlapping the cloud. That means there's nothing else to do. It's a consolidating market, we move on. But if we were in this area here, once we move through that cloud with momentum, that's a heads up that this move is going to last for a while. Once we have the bars and the moving average clearly above the cloud, doesn't matter what color the cloud is, okay, we know we're in an uptrend. With that slope on the 20, we know we have momentum in our favor. We focus our attention on the RSI, and as soon as we dip back below and above, there's our entry right in here. Okay? We wait for a trade above the high of that setup bar, take a long position, our stop goes just below the most recent low, all right, and off it goes. And you're going to notice this on many of these setups, is that typically when it triggers, it tends to move in your favor immediately, especially if you have a double dip. And it's important for a number of reasons. This will not only help you remain calm when you're in a trade because you're in profit immediately, all right, but if you're trade options like I notice some of you do, you know how important it is to have the trade go in your favor right away. When you open an option trade, if it goes against you, that loss in premium is so much more difficult to make up. You're going to require a much greater move to the upside to not only make back that loss, but then put yourself in profit. So when it moves in your favor, immediately trade in options, it's huge. Here's a chart of GMCR, all right? Same thing. Once we spot the candles and the moving average above the cloud, we know we're in an uptrend. When we have that momentum, we know we have momentum on our side. We focus our attention on the RSI, and once we get that dip, identify that entry bar or that setup bar, wait for a trade above, and off you go. When you get it in an area such as this, look at that moving average. What happened? It not only flattened out, but it actually started rolling over. That means we did not have momentum on our side. For that reason, this entry down here, we do not want to take that entry because we do not have momentum on our side. Once we recover momentum and we get a pullback, there's a nice entry, okay? And off it goes. Once we move through the cloud with momentum, look at that sharp move through that cloud with momentum. We knew we were in for a sustained downtrend. Then it's just a matter of focusing on the RSI and picking off these entries, which are everywhere. There's one here, there's one here, there's one here, and you'll notice that the bulk of these will work out in your favor. Now, there's one rule that's very, very important. It's going to prevent you from taking most of the losses with this system, and that is once you do get that setup bar and you're waiting for that trade, in this case on a short trade, a trade below the low of the setup bar, okay? If the stock trades below the, let me start over. If you have this setup bar and the stock actually trades above the high of that setup bar first, then the trade is disqualified or negated, okay? And that one rule alone will prevent you from taking those trades. In other words, most of the trades that don't work out with the system are just negated trades. They're not actually losing trades. It works the exact same way for a long trade. When you're waiting, when you have that setup bar and you're waiting for that trade above the high, should it trade below the low first, trade is disqualified. Okay, remember that. Here's a chart of UNH, and these are the kind of charts you really want to trade. When you have a nice trending charts like this, not that back and forth choppy action, but just a nice uniform slow grind in one direction or the other. It's just all about sitting back and waiting for these moves from one side of the moving average, or sorry, here the 50 line on the RSI, to the other, and just picking off these entries, okay? And when you get these double dips, even better. You can go through these. You can go through as many charts as you want, okay? You're going to see how often this works and just how well it works, okay? Here's a chart of BPT, same thing. All you're waiting for is to spot trend and momentum. Look at where we are right now on this chart. Look at the momentum we're building through this cloud. Now, the candles have already moved above the cloud, but the moving average has not. So there's still nothing to do here. But if this move continues and the moving average ends up on this side of the cloud with that slope, then we know we're in for a sustained move higher on this stock. So this is the kind of stock you want to put on your watch list and just keep an eye on them. Once we move above, wait for those moves below and back above on the RSI, and you'll be jumping all over those trades. For you futures traders, nothing else changes. The rules remain the same, settings remain the same. Anything you can plot a chart on, and this will work. Here's a chart of crude oil. You know, none of us, I don't think, anticipated how big this drop in crude was going to be. But what we did know is that it was going to be big, and that's because of this move from one side of the cloud to the other with momentum. Okay? Once we had that, then we're just sitting back waiting for these dips on the RSI. And for short trades, if you get that double dip, it'll look like the letter M, okay, reverse to the W. It's the same thing. But if you go through these entries, these setups, all along, okay, you'll just see that overwhelmingly the majority of them work out well. Now, can anyone tell me what they notice here on crude right now? What's happening with crude? Okay, look at that. All right, nice slope higher. Now, sometimes we get a retracement, pullback, a retest the cloud, and so on. But should we get a second, and it should have come here and then go through again with that, then you know that this is going for a ride. Okay? That's our experience with this. But typically, this is a heads up. Once you have that, okay, now that you have candles and moving average above the cloud and you have momentum, all we're waiting for is this RSI. If this dips below and back above, at the time that this crosses above, if the moving average here is still sloping higher, we have a proper setup. Okay, so keep crude on your charts. Here's a chart of the euro. Same thing. Nothing changes, but you know, you're picking off these moves here right along the RSI 50 line. Okay, and they're everywhere. Okay, all the way along. They work incredibly well. Okay, a couple of quick Forex examples before I ask you to type in a few symbols and we start answering some questions. Here's a chart of the euro Canadian dollar pair. Once we move below that cloud, okay, and we have momentum in our favor, focus our attention on the RSI. There's a dip above and back below, which happens, look at my crosshairs, happens on this bar. Okay, we're waiting for a trade below that bar, which we get the very next day. Stop goes just above the most recent high. All right, what happens? Immediately goes in our favor, and we have a very nice trade on our hand. Okay, here's another dip when we have momentum. See here, there was a dip, but it went too far. We lost momentum on the moving average, so we don't take that. We wait to regain momentum. Here's another pullback and another trade. Okay, here's another part of the British pound US dollar. Same thing, all along the stretch. Okay, and look, here's the key. What gave us a heads up that this downward move was going to happen? Okay, so not only are you warned ahead of time of what's going to happen, you know exactly where the high percentage entry points are here along the way. Okay, trading can be very difficult, but most of the time it's us as traders who make it difficult on ourselves. This is a very simple and easy method that prevents you from overcomplicating things. Okay, so now would be a great time to answer a few questions, throw out a few symbols, let me know what you want me to bring up a chart of. I'm just going to go through my list here and see if there's a few questions. Let's see, Deb is asking, what were the cloud numbers again for TOS? Let me bring up the indicator again here. They are, Deb, the default settings, 9 and 26. Those don't change. All I do is I uncheck the show plot box for the Tenkin, the Kijun, and the Chico line. I take those off, that's all, and leave span A and span B. But I use the default settings. Okay? James wants to look at Ford. Let's have a look at Ford. All right, so here, right now, we quickly look to our far right, and what do we see? Candles and moving average in the cloud. That means we do nothing. Next chart, right? That quick, split second. But when we did have momentum back here, we got this pullback. There's your double dip right in here. Let me highlight that for you. Okay, how did that work out? You know, even off the second entry, boom, off you go. So it works very well. Just remember, the key here is that when you do get that entry, or that setup, sorry, you want to make sure that the 20-period moving average maintains that slope. If it rolls over like it did here, you do not want to take that trade, okay? Let's see, does this work on lower time frames? How low is okay? That's for Vin. It absolutely does work on lower time frames. So let's have a look at, I don't know, let's look at DISCK. This was a chart I was looking at earlier. And let's move, say, to a 15-minute chart here. All right? Same, nothing changes. Exact same rules, exact same settings. You're waiting for, here, you have that move from one side of the cloud to the other with momentum. Then you're waiting for these pullbacks on the RSI. Here's your entry right here on the 15-minute bar, right here, this bar. Okay? So once you have the setup, what are you waiting for? You're waiting for a trade below the low of that candle, which we get on the very next 15-minute bar. Your stop goes just above the most recent high. Then it becomes a matter of managing that trade. But as you can see, boom, goes in your favor immediately. A really nice move over 15 minutes. We can look at, I don't know, price line is, I know a lot of day traders trade price line because of the activity. Here's the 15-minute chart. You can see multiple entries along the way. And what happened for each one, you know, a nice move here, a real nice move here. Even though this was questionable, it flattened out. You know, it worked out really, really well, but that's going to happen. You could have skipped that. But let's move to an hourly or 4-hour. Here, it's all about trend and momentum. Everything else becomes easy. Here's an entry down here. There's an entry down here. There's an entry up here. Look at those moves on the 1-hour chart. And remember, these are significant because this is price line. If we mark, let's see, like in this case, for example, around the 1228 level, you know, even if you just took it down here at 1202, and we're talking a matter of hours, these are very significant trades, okay? Switch to the 4-hour, okay? Same thing, nice easy trades, boom. In a matter of 4 hours, you're going from, you know, the 1200 mark up to 1260. Can you you know, use that to your advantage? Absolutely. If we look at it on the daily time frame, these trades are everywhere, okay? Let's see. Barbara's asking for what's the best time frame. Well, if you're going to trade intraday, I prefer 15-minute and 1 hour. Otherwise, I prefer the daily and even the weekly. The weeklies are fantastic. I mean, any system based on technical analysis, the higher you go in the time frame, the more accurate it is going to be. And these weekly moves are enormous. So if you're managing a 401k account, a retirement account in any way, this would be fantastic. Someone asked if it works on the S&P E-mini. Absolutely it does. Here's the weekly chart on the E-mini. Here are your entries. Here, actually down here, right here, right here. I mean, along the way, how easy would it be to manage these trades, right? If we go to the daily, same thing. It's all about trend and momentum. When you have that slope, okay, you're just waiting for these pullbacks, and the RSI is dictating when you're getting in. It's very, very simple, okay? Let's see if there's anything else here. Can I use this strategy for my IRA account? That's James. Absolutely you can. It would work really, really well. Suresh is saying, what's the RSI period used? It's a 7. RSI 7 with a line drawn right down the 50 level here, okay? All right. Let me just go back. I want to summarize my presentation. I want to just go back and cover a couple more slides, and then if I have time, hopefully I will get to more of your charts and questions, okay? So what I've shown you today is a system that will work on any market. You've seen examples of stocks, futures, Forex, okay, multiple time frames, any price level works really, really well. You saw just how easy it is to spot a trade setup on a chart. This is more than strong enough to be used as a standalone system. Absolutely, we've been using this for many years as is, but it is also a great complement to whatever you're using now because it is such a clean chart layout. You see that it tends to move in your favor immediately, which is huge. And with that one rule that we have, the majority of trades that don't work out are not even losing trades. They're just negated trades, okay? Now, I do see there's a ton of questions. I'll do my best to answer them all. But before we get back to that, let me tell you about a pro class we have coming up. Friday, May 29th from 1 to 3 p.m. Eastern. I myself will be teaching this class. It will be recorded if that date doesn't work for you. But during this class, what I will be teaching you is the complete system from entry to exits, including 5 different exit strategies. But I'll focus on the one that we use the most here at Trading Wins, okay? In addition to this, I'm going to show you a very unique way to add support and resistance that really increases the accuracy of the system. Now, it's extremely accurate as it is, but where this will really help you is on any given night or time frame, when you have multiple trades to choose from, this will help you differentiate the very high probability setups from your average setups. As well, will the 2 Fibonacci tools that I'm going to show you. Okay, one will be used to help reinforce your entries, and the other to help you set a target for your exits. I'm also going to talk about how we trade this strategy with options. You can really leverage this with options, and I'll show you exactly how we do so. I'll be discussing, delta, what kind of expiration you should look for, when you want to buy a call or a put versus selling a credit spread. We will cover all of that. One of the most popular parts of this class is near the end we do a search for real-time trades setting up that week, okay? I will share my watch list with you. We will go through dozens and dozens of charts together, and hopefully we will all walk away with a number of trades to put on the very next Monday. And as a bonus, thought I'd throw in a course that we sell separately on the Ichimoku Kenken Hoi indicator. During this class on the 29th, I will show you how you can use the Ichimoku cloud indicator as a strategy in itself, okay? Just so you have the full understanding of that indicator and you can decide whether or not you want to incorporate that into your trading. Okay, the link for this class is tradingwins.com/move. But before you order, let me tell you exactly what you're going to get so you know that it's right for you, okay? So about half hour or so after your order, as soon as your order is fully processed, you will actually receive an email with a link to the recording of the previous class we did, which was just a couple of weeks ago. It's an on-demand recording. You'll have this for life, and you can watch it right away and start using the system right away. So you don't even have to wait till the 29th of May. But regardless, we will save you a seat at the live class on the 29th, where we're also giving you the Ichimoku Cloud class. And as a real bonus, we're going to throw in a 30-day membership to our Pro service. So let me tell you a bit about that. Our Pro service is the most powerful way to get access to all our systems. We have multiple systems, some we haven't even released yet. And you will get real-time trade alerts showing you entries, stop, and profit targets for each, okay? It's really the best part of the service. You're also going to get premium nightly videos that show you exactly how we trade the various systems that we have. You get access to a members-only weekly chat, okay? We have every week. The next one happens this Thursday, 10 a.m. Eastern. They are also recorded. So if you can't make it, you'll receive those recordings, and they happen every single week for our members. You'll get to come into our room, ask me any trading-related question you like. It's a fantastic learning experience. And in addition to that, you can access our library of past educational sessions, and you can reattend any of these pro webinars that you take with us as many times as you want in the future, okay? It's an amazing value. You get all of that for 30 days for free. So together, That's a $988 value, but today all we're asking is $97. We really want to give you a chance to see what we do here at Trading Wins. Again, the link is tradingwins.com/move for momentum. And unfortunately, we do have to limit the class to 25 people. Our real goal for this class is to answer all your questions and make sure that when you leave the class, you are fully capable of trading the system completely on your own. And for us to do that, we do need to limit the number of people. So again, here's a list of everything you're going to get. The recording we're going to send you immediately after you order is actually almost 3 hours in length, I believe. That was a great class. You'll get that immediately, and then this is everything you're going to get at the class. And again, this does include the full scan for trades coming up that week, and it has really been one of the most popular parts of this class. Many of our members have sent us emails afterwards telling us exactly how well they've done on those trades, and really, you know, even if you're trading one option contract or one lot of shares, to make back $97 really wouldn't be much. But let me bring back my charts. If anyone still wants to look up a symbol, let me see how we're doing for time here, see how much time we have, and let me see if I can answer a few more questions for you before we go. Let's see. All right, looks like we have about 3-4 minutes. So let's see. Barbara saying the Thursday session is available after the 29th. No, Barbara, as soon as you sign up, you will become a pro member with us for the next 30 days. So actually, are you referring to April 29th, maybe this Thursday? Sorry, it'll be the next Thursday class. As a member, you'll be able to get on that, and every week thereafter. Shannon is asking me to look at Euro USD. Let's look at Euro USD currency. And see, this is a beautiful chart. This is exactly what you want to see. When you have a nice trending market like this, this makes trading so much easier on its own. And if you follow the rules, wait for that slope, okay? See here, we came through the cloud with slope. We were in for a sustained move, but then the moving average went flat. So you disregard these setups. But once it regained momentum and pulled back, look at this entry right in here, okay? And look at what happened right afterwards. Boom. Beautiful. Okay? And with the exit strategy that I'm going to share with you, it'll actually allow you to remain in this trade pretty much until down here to this level. Okay? There are ways to stay in there. I'll teach you those during the class as well. Let's see. John is asking, what happens to my subscription after the 30 days? Well, if you're enjoying the subscription, you don't really do anything. It'll automatically renew monthly at the $97 price point. If you'd rather not continue for whatever reason, just give us a call and we'll put a stop to it. We like to refer to it as the world's easiest cancellation policy. All right. Let's look at IBB. What was that? KG was looking for IBB. Here's another great chart, the NASDAQ Biotechnology Index Fund. Again, once you have that trend and momentum, you're just waiting for these moves across the RSI here and picking off these entries as we go. All right, very, very nice and easy. Let's see what other questions we have. Susan is asking, will you talk about options during class? Yes, I will absolutely tell you exactly and show you how we trade it with options. And let's see, Mike is saying, will you really be doing a search for trades? Yes, for sure, we will. Not only that, but throughout your 30-day membership, we'll be highlighting new trades on every nightly video we do. We send you those nightly videos from Sunday to Thursday every week, okay? Will the session be recorded? Because I can't attend. That's James. Yes, it will. Absolutely. You'll receive 2 recordings. You'll receive the one from the last session immediately after you place your order, and then you'll receive the recording of the live session on the 29th. Okay. Let's see. What else? Oh, Suresh, welcome. One of our members is on here. Glad to see you with us. James is saying, does my pro service start today? Absolutely, it does. We'll get you set up as soon as possible. That does, no problem. Thank you to several of our members here who have ordered. I think I am out of time. So thank you so much again to everyone. Let me just quickly show you again. These are the items you will get in the class, and you'll receive a recording of the previous class we did immediately after your order. The link is tradingwins.com/MOVE, short for it's move for momentum. Thank you very much for everyone for joining us today. I hope you got a lot of value out of this.